Welcome to you both. John, your reactions here, WTI back to around 102, energy stocks holding up relatively well, though.
Yeah, I mean, I think it's a terrific move. We were disappointed this morning once again by OPEC and our supposed ally, Saudi Arabia. They didn't come across with any additional barrels. This is a meaningful amount of crude oil that the administration is going to be putting onto the market. By the way, the volume of 1 million barrels a day is easily achievable. If you look at the SPR website, where all the details of where the crude oil and everything else clearly states that the capacity to outlet the oil is over 4 million barrels a day. So we have that. And this was done once before back in 2018. In October and November of those 4 weeks, we achieved a pace of over 1 million barrels a day back then. So this is meaningful, and particularly now with the extra news of SPR barrels potentially from our true allies. This is something that's a momentum killer for prices. And that's what you want to use this SPR for at times, to be a momentum killer. Because the United States is up against a cartel that works in their own interest. Yes, you can't blame them for that. But because of that, because of this market not being an open and free one completely, this is a great lever to pull, and I've always advocated for us aggressively using our SPR. I
remember you said that was a big reason why crude prices had come down in the past, John, but just to follow up on that point, even as we've seen it be a successful headwind, we also have then seen energy prices rebound and be higher than prior to those releases. So why wouldn't we expect a similar dynamic to play out this time around, even if it's, 4, 6, 8, 12, 16 weeks from now?
Well, look, I mean, this market's been hit with tape bombs. Where this market has jumped up $6, down 8, up 10, down 5, because we're pricing the incremental barrel right now. Look, if we do fully foreclose, if the world fully forecloses Russian oil supplies, this SPR release won't be able to match up against that. But if we get a break on some of that, if we get a break on this Caspian pipeline, a situation where a freak hit the Baltic to such a degree that there was damage done to the export facilities, which are rapidly being rebuilt and rehabilitated, again, that's going to add to the extra supply that we need. It's a finely balanced market right now that's a bit short, which is why we're holding above 100. But we got a negative economic data point out of China last night of some significance, and there are other things developing here that should potentially, with this, favor lower, not higher prices.
Kevin, what would you add?
Well, in some ways, this is a bet on a short war. 6 months seems like a long time. This is an enormous amount of crude, as John correctly points out. It's also pouring into an enormous yawning deficit in inventories relative to the 5-year average. And so this is about half of the hole in those inventories over the course of 6 months. Add in the strategic partners, maybe some Iranian barrels coming back pretty soon, and we could move from deficit to modest surplus. But we wouldn't close the gap. And the question is going to be, where are we on the other side? A lot of that will depend on demand. The IEA has some pretty grim expectations for demand to retrace, but it tends to be pretty sticky, demand does, and we'll have to see what really happens.